Good morning, folks, and welcome to Stock Charts today. This is Bob Desmond. It is the 16th of May, 4:58 in the a.m. Let's get started with where we began yesterday. Tesla, TSLA, the symbol. We all know it. It's been in the headlines, and there are a lot of problems for the stock. I'm not a fundamental guy. I really don't know net whether or not all the headlines are worthy of the weakness in the share price, but I do believe that stocks tell a story. They are a forward-looking mechanism, and there is in all probability substance to what we're hearing in the headlines. Let's first begin with a conversation with the weekly chart. We spoke about this yesterday, that we were leaning into a serious support level, and that were it to break, there would be problems. And sure enough, it broke yesterday. Now, why is it that you see an avalanche of selling immediately following a break of a support level? It's because there are so many stop-loss orders stacked up right below that support level, which for the most part convert into market orders when triggered, market sell orders, and then you have your flush down in the share price. Now, in all fairness, we did bounce off of the lows of the day, and we do have a bit of support here at the 279.23 level. If that breaks, we're coming all the way back down here to the lows of April. Let's drill down to a 4-hour chart, see how we might open up today. Here's the break of support. We bounced a little bit. We became a little bit oversold. RSI is hooking up. I'm not going to be the least bit surprised to see a rally and an attempt to try to recapture these support levels. When you have a stock, back to the weekly chart, which is in a downtrend, which these shares are in, the probability, back to the 4-hour chart, the probability of a recapture is mediocre to very low. And in all probability, we are going to roll over and break down to new lows. So I would avoid these shares, and they are setting up for a short if you did not already short them on the break yesterday. Now, immediately following stock charts today, I'm going to go into a morning update with members. I'll post it in the members area, and we're going to do some analysis on the major averages and the stocks that we are holding and a couple that we are watching as potential longs. Given the price action in the dollar, in yields, and in the markets yesterday, I wanted to see how we would set up this morning, see what the reaction was out of Asia and Europe to our trade. And I thought it was better to have that information at hand to formulate a strategy as we proceed into Wednesday. So members, stay tuned. Let's blow through the pre-market activity. The dollar surged yesterday, and in fact, we put in a new week-over-week high. We did not close there, though. We gave up some of our gains. Now, the fact that we closed off the highs of the day was a bit suspect with regard to the ability for the dollar to continue higher. Volume through the last hour of trade was fairly light, and then you saw volume pick up into the close. Now, what we're looking for here, and this is not going to be good for commodities, I'm going to get to gold in a moment, is a breakout of this bull flag formation. If we get a new daily high, folks, watch out for precious metals. I warned about this yesterday. Watch out for precious metals. Now, one thing that may help put pressure on the dollar is the Japanese yen. You had GDP data come out of Japan yesterday, and it was not good. I should say overnight. It was not good. Yet, the yen rallied. Again, this is a 4-hour chart. We recaptured support. So this may put a bit of pressure on the U.S. dollar. Now, taking a look at the euro, which we really need the euro to strengthen up here a bit, it is not looking good. It is weak. It's a sloppy chart. By far, the dollar is showing far more conviction than the euro and the yen. Now, what is this hurting? Silver clubbed yesterday, broke down below support, limping back, attempting to recapture prior support, now resistance. Good luck if the dollar breaks out. Gold, a significant technical breakdown yesterday on gold. The 1300 level, psychological support, broken. You can see how we have limped back. We are up on the morning. We're off the highs of the session. We were up higher only a few minutes ago. And we're pulling back now. No bueno. This is not good. Yields this morning, well, this is the note. So as we limp up higher here, this is not a chart that is very bullish. This is the 30-year bond price, not the yield, but the price. And as the bond price rises, yields are pulling back. And you can see we're limping up here. Let's go to the 10-year. Yeah, we held support yesterday. We're bouncing back a bit this morning. So far, this is a dead cat bounce to me. We were oversold on this 3 standard deviation Bollinger Band. If we begin to roll back over again and break down below yesterday's lows, folks, you got to beware of stocks. Speaking of stocks, let's leave off with the S&P 500. So as we entered Tuesday's trade, we were in a very tight pennant formation. The price of the S&P 500 failed to hold support. It broke down. We are now limping back. We managed to, I extrapolated out here, the prior upper band of resistance. You could see that we broke out above that support level. The question is now, do we consolidate? Do we rally back in an attempt to recapture support? This is a very precarious market. I am of the opinion as go yields, inversely goes the stock market. So as always, I'm going to pound the table. Beware of the well-dressed salesmen on CNBC who are going to tout earnings this past season. Remember, the earnings are fairly good, right? How did the stock market perform on the news? Not that great. And if it didn't perform all that great on the news, why would it perform now with yields moving higher? And with that thought, I'm going to segue now to a morning update with members. Again, members, I'm going to post this in the members area of the website. If you're not currently a member, sign up for the 14-day free trial offer. If you watch this on YouTube, subscribe, click that bell, get notified of future videos. Leave a comment. If you found us through StockTwits, Twitter, Seeking Alpha, follow me there. And if you watch us on the website, enter your email address, We Hate Spam Too. We'll send you out a few trade tutorials. Everybody have a profitable trading day. Beware, and please do not go trading the first hour of trade unless you are stopping out of bad positions. Members, let's get to morning update. Okay, good morning, members. Let's go over the daily chart of the U.S. dollar and why the dollar matters and why the price action yesterday is somewhat suspect. So here we have